Welcome to the Real Estate Way to Wealth and Freedom podcast with Jacob Ayers, providing actionable content to help you along your journey to financial freedom through real estate investing. As the premier asset class, real estate has helped ordinary people just like you amass fortunes. The benefits of passive income from real estate investing will allow you to live a life you want. And now your host, entrepreneur, real estate investor, and apartment deal syndicator, Jacob Ayers.
Hi, and welcome to the Real Estate Way to Wealth and Freedom podcast, episode 133. Hey, I'm your host, Jacob Ayers, and today our guest is Matt Faircloth. Matt first joined us way back on episode 42, where we got to know Matt, who is the president and co-founder of the DeRosa Group, which is a developer and owner of commercial and residential properties with a mission to transform lives through real estate. Well, Matt's a really fun and relatable guy, and he recently authored a book called Raising Private Capital. So that's what we're going to be discussing with Matt today. Raising private capital, how to build your real estate empire with other people's money. Matt's a really fun guy, so without further ado, let's jump into this week's episode. All right, today I welcome on the show Matt Faircloth. Matt, hey, thanks so much for joining us again.
You are welcome. Thank you, Jacob, for having me here. It's an honor to be here again.
Yeah, it's our pleasure. Well, hey, Matt, for the audience members who hadn't maybe listened to your very first episode on, I believe it was episode 42, could you run us through a little bit about your background, how you got started investing in real estate, and kind of your journey up to this point?
Sure, no problem. I went to college and had a typical day job as a traveling salesman. Read Rich Dad Poor Dad, as many other investors do, to get started, and it, blew my skull out, and and just completely transformed me really as a book. And I decided, I got to do something different. And so I did a house hack, which is what, it's like I lived in one bedroom and rented out the other two, which I highly recommend. Anybody who's getting started in real estate does a house hack, whether they rent out bedrooms in a home that they buy or buy them a small multi or whatever it is. And so I bought a 3-bedroom, 1-bath house, rented out one bedroom, lived in one bedroom, rented out the other two to a couple of my buddies. And it's 2 friends of mine got to live with, would have probably lived with them somewhere else, but now I was the landlord, and they were each paying me $500 a month, and I lived there for free. I made $60 a month off of, in rent roll, but also got free housing out of the gig. So it was phenomenal. It really was. And that turned my ears to the power of real estate. It just turned my head to it. And was like, this is amazing, and I need to do more of this. And so within 2 years, I quit my job and was investing full time.
Yeah, awesome. So, got started with that very first house hacking deal. Such an easy way for those people who are maybe haven't got their first deal under the belt. Go out there, get that low down payment, kind of get your feet wet in it, and, kind of learn the ropes as you go. Such a brilliant strategy. And great stuff there. So, you're on to bigger and better things these days, or bigger things, that is. So, kind of walk us through what's on your plate these days.
Well, we're doing a lot of placing of investments into projects that I'm involved in. And so that right now, that looks like putting people alongside us into fix and flips as a lender or as a joint venture partner, meaning they get a small rate of return on their money, but then they get a percentage of the profit too. That's called joint venture. So we do that. We do, just like I said, straight loans. And then we also do equity deals where we'll go and put investors together and buy an apartment building or buy something that's a large cash flowing asset, right? And so we do things like that, but those are the pieces of the puzzle that the market is receptive to right now. Right now, it's a good time to fix and flip. It's a good time to buy apartment buildings. Still, you can find the right deal, but it's a good time to buy apartment buildings. And so we have learned that space really well. And so people that want to invest with us, that's where we direct their investments alongside us, because we want to make our investors great rates of return. And that's what we're up to.
Yeah, awesome. And that's something I want to dive into today is kind of making that transition from, taking down these deals by yourself, that first house hack deal. And then I know you did
Hmm.
some, smaller deals after that.
Hmm.
And then finally you turned the corner by starting to raise private money. So, can you walk us through that transition and what's that process look like for those people who are, maybe thinking about starting to raise capital from other investors?
Sure. Well, I believe there's folks out there that'll tell you that you can do this with none of your own money and no experience and first deal and all that. Hey, I don't believe that, and I believe that some of the folks that are out there saying that are saying that so that they can sell you a course, or get you to get like clickbait or something like that.
Yeah.
Uh, and that. So I think that really what you need to do, which is what we did, we spent years developing a track record and years developing a network, a track record, developing expertise in the business. And not that you got to be, a Sam Zell or like the primo real estate guy before you go start raising money to other people. But I think that you really need to know what you're doing, and you know people that can help you implement and everything like that before you go start raising money. So that's the first thing that I would tell your audience. And I would also tell them that you don't have to go raising millions of dollars to be a private money syndicator or to do private money deals. My first private money deal was for $50,000. You know, it was an equity deal, meaning a guy, he owned a half of the property with us. We owned half of it. He owned the other half of it. And I think that most of your lenders, whether they know it or not, I'm sorry, most of your audiences knows lenders or knows even equity folks that have 50K to put in if they know what to look for and that. So
Yeah, yeah. So let's dig into that a little bit further too. So you kind of think what does a private money lender look like? Sometimes they might be in your network already. Sometimes they might be friends or family or coworkers. So where do
mhm.
you tend to find those private investors?
Right. I wouldn't. Right now, we've developed a big, social media presence with my YouTube channel and with our website, and with the activity that we're on and getting to talk to great folks like you and stuff like that. So I wouldn't say that's where you start in attracting people. The way you start, like again in the book that I wrote, the tier three, becoming a thought leader and really out broadcasting yourself and being in the middle of conversations and kind of driving the conversations. That's how you develop leads once you've achieved that level. But to get started, it's really a matter of, number one, talking to everyone about what you do. And although someone's profession may be very noble and something that's great that they're very proud of, the next time they get asked at the dinner party or the barbecue or the picnic, or the whatever function it is, when people say, "Hey, what do you do for a living?" don't don't really tell me what you do for a living. Tell them you're a real estate investor. And so, right, not that you don't lie or whatever, but you can also be a real estate investor along with that. And so, I find that you should broadcast that, either whether it's on Facebook or to people that you meet, to relatives, to everyone, that you're investing in real estate. Because a lot of people will tell you, that's you're hokey. You should just stick to your job or whatnot. But that's not true. So you've already made the commitment to get into the business. But some people will say, geez, I sure wish I could invest in real estate, but I don't have the time. And that's when the light should go on in your head and say, well, I have time. If you've got capital to put to work, I have time, and I can help you put it to work in the business that I've learned. You know.
Yeah, I love it. So let's kind of talk about, how you've approached this raising private capital, that is by helping other people, right? So you're taking this approach of helping other investors who maybe don't have that time or don't have the
Hmm.
ability or the capacity to go out and look for deals. So
Yeah.
kind of talk about that relationship you've built with these investors.
Well, it's a win-win, right? In that I'm not trying to take advantage. I'm trying to give them a great rate of return on their money through a vehicle they have no access to. That, because the way that our retirement plans and structures are set up, the only real place for them to easily put their cash is into the roulette wheel they call Wall Street. Um, yeah, and so they don't. They have no idea what the stock market's going to do tomorrow. Mostly, they don't have collateral. There's no downside. I'm sorry, there's no down, like safety net underneath them, and so they could fall and hit rock bottom, as a lot of folks that put their retirement money to that have. And so the win-win is that real estate does provide collateral. It does provide a different rate of return that's got nothing to do with Wall Street. That's not just at the whim of folks that want to move big chips around, and you're just kind of subject to that. If they decide they want the market to crash, then they'll push a button and make that happen, and you're kind of subjected to that. But real estate has none of that attachment. Real estate's just there. If your tenants pay your rent, you make money. If the fix and flip, produces cash, you make money. And if you're a lender, you also have collateral, which is something you have no access to in most retirement plans or mutual funds or whatever. Meaning that if the borrower, me, the deal provider, as I call them in the book, doesn't meet the terms of the loan, then me as the lender, as the cash provider, can come and take the asset that's pledged. And I mean, find me a stock that'll do that.
Yeah, absolutely. And I don't have an answer for you there. So when we're looking at the process of, getting started raising private money from investors, you've talked about first building this track record. You can't necessarily just go out, take down your first, 300 unit apartment complex with no money, no experience, no knowledge. Like, you've got to have something or another. And so next kind of step in this process is start building that network, start building that,
and start small. And you don't have to do a 300 unit deal. Like I said, my first deal was 2 townhomes at $50,000, a $50,000 investment, with a loan in there too, but the equity was $50,000. And we were able to take down 2 little townhouses. And I mean, it's not like it made, either of us millions, but it was a good place to start. And each of us made like $300 a month in passive income. I didn't have to put any of my cash in. He put the money in. I did the sweat. And you can arrange sweat equity arrangements with people to get started and start really small if you want.
Yeah, awesome. And I know in your new book that I've got here, Raising Private Capital, you've kind of laid out the definitions of a cash provider and a deal provider. So for the audience members who haven't yet picked up this book, which we'll urge them to later in a bit, but can you walk us through kind of those roles of each of those people, just for the people maybe don't understand quite well?
Sure. With 2 sides of the equation, there's the deal, okay, and then there's the money that goes in to make the deal happen. One person is the person with the real estate network, with the contacts, whether they're doing it full time or not. They're the hustler that's going to run around and find the opportunity that, finds the fix and flip deal, or finds the rental, or finds the, multifamily, whatever it is, whatever the deal is, they find it. They vet it, make sure that it's profitable. And they build a network of real estate agents, wholesalers, people to bring them opportunities. They provide the deal. They also most likely are the operations manager of that deal. So when it closes and they now own it, they are the one that runs around and browbeats the property manager to make sure that you meet performance on finances, browbeats the contractor to make sure that they're on time, does whatever it takes to make the deal profitable. That's the deal provider. And then their obligation is to find the deal and make it profitable. The cash provider is someone who puts up the cash and it puts up the money that wants an alternative investment, wants to put their money into something that's different than Wall Street, whether that's through a retirement account or their own cash or whatever. And that cash provider puts their money up to go into that deal. And these 2 parties, and it could be multiple people on both sides of the equation, but these 2 entities, a deal provider and a cash provider, are both sides of what I propose to be a very win-win transaction. And the book describes how to structure win-win. Like the book, we talk about what is a win for a cash provider and what is a win for a deal provider, and how do you create a deal that creates win on both sides.
Yeah, awesome. And let's get into that. And how do you structure these deals to make them a win-win for both the cash provider and the deal provider? I know there's a lot of different ways to split up deals, and every deal is a little different. But talking in general terms here, what are we looking at?
Well, it's not like there's some silver bullet where I can say, well, Jacob, you've got to charge them, you've got to pay 9% and that's a win for them. You know why? Because it doesn't, the key is when you talk to your cash providers or potential cash providers, it's not about the deal. And too many deal providers or people that want to be deal providers want to lead in and talk about the deal. They don't want to talk about that. They want to talk about, first of all, they want to vet you and make sure they can trust you. Then you want to talk about their goals and where they want to go financially, what their retirement age is, what retirement looks like for them. Do they want to move? Do they have kids going to college? Really get your head around their financial picture, and in a way, approach it as if you're an alternative financial planner that's not making a commission off every nickel they give you, like all financial planners are, that you're going to plug them into mutual funds that pay you lots of money in commissions, that you're going to partner with them and do a deal with them. But most importantly, get to know what a win for them is. What kind of rate of return do you want? Do you want to build up your retirement accounts? Do you want to safe and secure investments? What do you want? You know, and that's how you find out what a win for the cash provider is by asking a ton of questions and like delaying talking about deals for a while and until you really have your head around what works for them.
Yeah, and it's probably a little counterintuitive for a lot of people out
Absolutely.
there listening, thinking that you, as the deal provider, are more important than the deal itself. So, you almost think like, the deal is the meat of this
Mhm.
thing, but really at
Deal
the base
secondary.
of it's kind of a relationship business, and the investor is investing in you just as much as the deal. So,
The deal is just a vehicle. We talk about that in the book, and the deal is simply a vehicle to take both parties where they want to go. It's not about the deal, and the deal provider that's going to go bursting into the room, going, "I'm going to make you 15% on your money," is probably not going to get that money. Like they just you kind of seem like a snake oil salesman at that point. It's really if you build relationship, you can do very well in this business. If you don't, and you make it about just selling and about trying to close somebody and trying to convince them that they should invest with you, you might walk out with a little bit of money, but you're not going to get referrals.
yeah. Well, Matt, there are some people out there that have blinders on to giving equity up in their deals. They think I'd rather have the whole piece of the pie than, a smaller piece of, any pie. So what's kind of your perspective around that? And, what would you tell those people with that kind of mentality?
So you can build a big portfolio just on loans, just on doing debt deals. Okay. But you're never going to do really big deals. And I mean, you could do, like, I know people. I got one friend that owns like 400 units, but they're all single family homes, duplexes, triplexes, fourplexes, a little bit of this, a little bit of that kind of thing.
Yeah.
And he did it using the Burr method, just doing it over and over and over again. Put private money in the deal, fix it up, renovate it, refinance it, do it again and again and
That's a
again and again
lot.
and
Yeah.
again. Right. And a guy worked his tail off and he makes a ton of money because he's got 300 units that he owns, all him, no equity investors. That said, you look at some of the, like, so I think that you can do that if you want. There's nothing wrong with that. If you like being a hands-on guy, if you like, really being able to touch it and smell it and understand it and going slow and steady Eddie, that is the pot. That is the place for you, and you can build $1 million empire that way. But if you want to do big deals and be able to move the needle and do forced appreciation, and control really big assets, I know of no investor that owns like shopping plazas and apartment buildings or large assets or whatever and didn't have to give some equity away. Because unless you're born with a silver spoon on their mouth or got really lucky and made like millions and millions and millions of dollars in cash that they're able to take deals like that down on their own, you're going to have to sell some shares of the asset to make it work. And everybody does it that I know of. That's in the big in the bigger spheres. So that's the choice you got to make. Is do you want to be in the big leagues and compete with the big dogs and do apartment buildings and stuff like that, or do you want to slow and steady Eddie it? There's
Yeah.
nothing wrong with either one of those.
And if you think about it, that's essentially what corporations do, in terms of
Mm-hmm.
selling equity in terms of stuff in the form of stocks. That's what they're doing is they're selling off pieces of their company to raise money to, fund, research and development and new acquisitions and all these things, just like you are as an apartment deal syndicator. So
Mm-hmm.
yeah, it makes sense. So, well, Matt, what would you tell the investor out there who's, just kind of looking to get started, needs that kind of motivation, that to kind of overcome that fear of going out there and starting to pound the pavement and put their name out there and start drumming up interest with their network, and kind of seem pretty fearful, and a lot of people have trepidations, I'm sure.
Yeah.
So
Oh man, there's a lot to say to that. I mean, first of all, the bottom line is, man, people need to. This is the dirty little secret. I think maybe of life, I guess, is that fear doesn't go away. And that people expect that, well, when I figure it out enough and when I think about it enough and when I collect enough data, I won't be afraid anymore. That's BS. It's not. You're going to continue to, you're going to just be afraid. And then eventually you've got to just decide to take action in spite of fear. And what I've learned is that just fear just kind of stays there, and I've just learned to act in spite of it, and that it gets less. It's just not that I'm like petrified the whole time I'm taking action, but you feel a little uneasy. You just learn to get used to it. It's kind of like a compass. That's number one. Number two, when you're talking to investors and you start getting a little squirmy, you're feeling like, oh, geez, this guy, what if he says no or whatever? Like, realize they need you. The whole conversation we had earlier about Wall Street and everything like that, they need you. They don't know where to go with their retirement account. They're not sure what the stock market's going to do tomorrow. They don't know, and then they need something alternative, but they just don't know where to put it. And so if you're willing to step up and educate them on how, in working with you as a cash provider, can really help them build their wealth, then then you can provide a win for them, right? So that's what I would say to people that are afraid: is fear doesn't go away, and they need you.
Yeah, it's a really important factor, and I think going in with that mindset really, would put a lot of people at ease. Realize that you're there to help them just so much as they are to help you. So yeah, you are bringing value to the table as a deal provider. So yeah, good stuff there.
Hmm.
Well, hey, let's talk about the motivation behind you writing your book, Raising Private Capital. We alluded to it earlier, but it's a new release. So tell us about it. Tell us what the audience members can expect when they go out and pick it up, and yeah, walk us through a little bit.
It's everything I know, Jacob, all in about 200 pages. It's it's I've had a long relationship with Bigger Pockets, if I can mention them, because I'm
Please,
grateful
yeah,
for
absolutely.
them and everything like that. I'm grateful for my relationship with them, and they were looking for a book on the topic, and I said, I've done a lot of private money stuff, so happy to talk about it. Yeah, and of course I made the mistake of discounting how hard it is to write a book, right? So I was like, oh, how hard could it be? I'll do it on a half day on Saturday, no problem. I'll just knock it out over the weekend. Man, writing a book is hard, but I didn't realize how challenging it was going to be, but also rewarding too, because I was able to tell a lot of old stories, and it was therapeutic in some way, and also it's of value, because my hope is that the folks that read it can avoid some of the mistakes that I made, that I talk all about in the book. And this isn't like a Matt Faircloth's like success book, like, hey, this is all the money I made and pound my chest and look at me. This is like, hey, this is how I screwed up right here. Don't do this, and then don't do this again. And this is what I learned, and this is what I do now. And so it's a lot. There's some successes in there, but there's also some lessons that I hope that the readers implement themselves, so that they can be just more successful and not have to go through what I did, to build the business that we have now, and everything. So that's what the book is. It takes you from the very beginning, assuming you've never raised private money. But it's not only for people that have never raised private money. If you've done a bunch of private money deals, the book very quickly gets to level 202, and we start talking about SEC stuff. We talk about a lot of equity deals. We talk about apartment buildings. We talk about joint ventures on fix and flips. We talk about all kinds of complicated stuff. But it's like I start you in kindergarten. I take you all the way up through high school, and then to college, and then grad school throughout the book. So um,
Yeah.
so it does start in the beginning and work its way out as we go. So it's for anybody that wants to build their business with other and build win-win partnerships of other people's money to build it.
Yeah, I think something you've opened my eyes to in this book, Matt, is, when I think of raising private money, I think of like, okay, you're doing large apartment deals or large commercial buildings or whatever that might be. But, like you've alluded to earlier in the show, you actually got started raising private money on smaller deals and, doing joint ventures and those kinds of things. So yeah,
Hmm.
just kind of like you mentioned, earlier, starting with smaller deals is possible, even raising private money. And, I kind of tend to think like, it's like, level 303, doing 100 plus unit apartment buildings. But, I forget you can
My
dial
hope
it
is
back
to
down.
dispel that there's many rumors. Sorry to cut you off, by the way.
No, you're
But
okay.
there's many rumors about private money and about private capital, and a lot of it's about private equity too. Like, the SEC is going to kick your front door in if you do a private equity deal wrong or something like that. But there's a lot of rumors. My hope in this book was to dispel a lot of the rumors around raising money, and to give people facts, because it's all research stuff. It's my experience in it, and it's also my research with attorneys, and the facts that I've found out about how raising money really works. And so my hope is to dissolve a lot of the misconceptions that are out there.
Yeah, sure, sure. Well, Matt, aside from your new book launch, what's been new with you, and what's on your plate these days in terms of investments, and what does the future hold?
Aside from chasing around a 4-year-old and a 1-year-old, and trying to keep them from putting things in electrical sockets and pretending to ice each other and stuff like that, like there's that. And then there's just running a business and doing more deals. So the thing is that, like writing a book was not what I do for a living. I also run a real estate business. So we've been trying to find more opportunities and working with more investors and doing more flips, and we did a new construction project in Philadelphia that was great, a lot of fun, like cool project with rooftop techs and really cool finishes. And you did a good flip when you look at it, and you're like, man, maybe I should buy one of these. I should live here. Like, sell my house and move into
I
my
don't want to sell this. Like, no.
Right. Yeah, I know. I'm just gonna keep this. This is just too awesome. And so I know when I did a good flip when I start thinking thoughts like that. We've done a few recently that I had that thought. But then I didn't, and then I sold it.
Good.
But we're doing a few apartment building projects, smaller and bigger. We do some small deals, we do big deals, we do whatever just works and whatever's going to provide a great return for our investors, and that we can invest alongside them and make some money for ourselves too in exchange for putting it all together.
Yeah, awesome. Well, Matt, it's been a great conversation. It's been awesome catching up with you, revisiting this new book that's launched. We're going to link this book in the show notes. Once again, it's called Raising Private Capital. But tell us a little bit about where audience members can find more about you if they want to reach out to you, and most importantly, where they can find this book.
Sure. Well, they can do all of that at DeRosaGroup.com, because we've just revamped our website. And DeRosa Group, that's DeRosa Group, DeRosaGroup.com is my company website. And on that website, they can pick up the book. They can check out my YouTube channel. They can read some articles that my wife and I have written. And they can also, if they're interested in hearing more about what DeRosa does as a company, or to hear more about our investments or any of that kind of stuff, that's all available there on the website also. And you can also hear about our DeRosa Gives program, where we take a percentage of the revenue that we make as a company, not of investors' capital. Once our side comes back, we take a percentage of that and give it away to a different not-for-profit that we pick on about a monthly basis and stuff like that. So that's called DeRosa Gives, and they can read up more about that too.
Yeah, awesome. Well, that's DeRosaGroup.com. We'll link that website in the show notes. Matt, as we're wrapping up here, any parting piece of advice or guidance you've got for the audience members?
No, I think that just be mindful of fear and understand that this thing's it's nowhere near as complicated as the people may be making it out in their head. As long as you collect the right data and build the right team, I think that you can very easily really build your real estate business and help a lot of people reach their financial goals while you're doing that.
Yeah, awesome. Well, Matt, hey, thanks so much for coming on the show today. We look forward to having you back on in the future.
Anytime, Jacob. You're always one of my favorite interviewers. So thank you for doing this, and I look forward to speaking to you again soon.
Hey, you bet. Thanks, Matt. All right, that wraps up our episode today with our guest, Matt Faircloth. Hey, Matt provided a ton of great value for us, and he really knows what he's talking about when it comes to raising private capital. If raising private capital is something you're interested in to grow your real estate portfolio, I highly recommend checking out Matt's book, Raising Private Capital. The book is linked in the show notes for you to pick up if you'd like to. For more information and resources or to connect with Matt, visit the DeRosa Group, also linked in the show notes. Well, hey, thanks so much for taking the time to listen to this episode. If you like what you've heard, please go over, leave a rating and review on whichever platform you're listening on. And as always, for more information and to resources and to connect with me, visit www.jacobayers.com. Till next week, engineer the lifestyle you want.
You've been listening to the Real Estate Way to Wealth and Freedom podcast, providing you actionable content to build your real estate empire. Nothing on this show should be considered specific, personal, or professional advice. Please consult an appropriate tax, legal, real estate, financial, or business professional for personal advice. The opinions of guests are their own. Information is not guaranteed. All investment strategies have a potential for profit or loss. The host is operating on behalf of the Real Estate Way to Wealth and Freedom, LLC, exclusively.